Okay, good afternoon, everyone, and thanks for joining us. My name is Corey Henn. I'm an associate at Concrete Ventures. We are an Atlantic Canadian pre-seed fund focused on finding great ideas and founders looking to build massively scalable businesses here in Atlantic Canada. One of the biggest challenges we hear about from our pipeline and portfolio companies is around sales and marketing. So today we're excited to have Ross Simmonds from Foundation Marketing here to talk about just that. In today's session, we're going to talk about the similarities between the worlds of content marketing and investing and how you can use this type of thinking to drive success in your business. Throughout the session, feel free to use the Q&A feature to ask any questions you might have. And if there's some time at the end, Ross will be happy to answer them. And with that, Ross, I'll hand it over to you.
Thanks, Corey. Appreciate it. It's great to be here. It's a pleasure. I'm excited to jump in today and talk about my favorite topic, which is content marketing. So I'm thrilled to have you all here. In the chat, I do want to do a quick run and question for you folks. So Gavin, Gordon, James, Kenneth, Laura, Nicole, Rob, Sahan, the whole squad, I would like to ask you a simple question, and it is this: where are you calling in from? Are you in Canada? Are you in Nova Scotia? Are you in New Brunswick, Newfoundland? Where are you? I'd just like to see a quick run in the chat of where some folks are from. Sydney, nice, awesome. Would love to get some context around where folks are. If you can drop that in the chat, it would be great. Otherwise, that is true, James. I do know where you're calling from. Nova Scotia, Dartmouth, Fredericton, Moncton, Newfoundland. Awesome. Cool. I love it. Super excited to jump in. So today we're going to be talking about why marketers should be thinking more like investors to drive content results. This is something that I'm extremely excited to share with you folks, and for a lot of reasons. I'm a big fan of investing. I'm a big fan of what the folks over at Concrete are doing. I'm a big fan of anyone who is leveraging capital to invest in innovation, technology, and the wonderful world of SaaS in particular. That's something that I'm excited about. I've been an angel investor over the last few years, and I've been able to see the opportunity that exists. So thrilled to be here. I want to take you all back into time, though. I want to take you back into time to 2008. I had just graduated from university. I've read a bunch of books. I've read a whole bunch of blogs. I watched a couple of YouTube videos, and I decided amidst all of that now was the time, amidst a global recession, because it was back in 2008, to launch my very own marketing agency. So I launched my first marketing agency right at the beginning of 2008. And this is what the traffic for a lot of the clients that I was working with looked like. It was declining very rapidly. People were running family-owned real estate businesses. People who had their restaurants. It was a whirlwind. I had no idea what I was doing, right? Like if you look at this chart, imagine what it would feel like if this was the traffic chart for your client. Imagine this was the traffic chart for your product and for the company that you're working with. Imagine that this is what the traffic looked like for a brand that you're working with as it relates to how well they're doing and showing up with in Google. Now, if you were to look at this and see like this type of report coming across your desk as it relates to traffic, as it relates to social referral, anything like that, you would be like, oh, this is a massive failure. But now imagine that this isn't your traffic. It's the year 2008. You just graduated from university. You read a bunch of books. You read a bunch of blogs. You watched a few YouTube videos. And amidst a global recession, you decide that you're going to buy your very first stock. And in fact, you're going to take one of your scholarships and actually use it to buy that stock. That is what I did. I went all in with one of my scholarships on a stock called General Motors. And it went to the floor. It went all the way through to the ground. That wasn't traffic. That was actually what my chart looked like after taking an entire scholarship and going all in on GM, their stock. When I sold that stock, I lost all my money. I believe it actually declared bankruptcy to a point in which it was not able to give me any type of return, and thus it literally evaporated and vanished. In that moment, when I had to sell or absorb the loss, I learned a very valuable lesson. You can't just guess to make an investment in the market. You shouldn't just guess to make an investment in the market. And I learned in that moment that the same thinking that is applicable to investing should be applicable to business. You can't just guess that, oh, GM is a major company, they're going to come back. You can't just guess that a stock is going to go to the moon. You need to invest your time and your energy. You have to invest in studying. You actually need to understand the game before you jump into it, or you can get burned like that little young guy there did when he decided to put an entire scholarship on one stock, because the market doesn't care about your feelings. The same is to be said about marketing and content and storytelling. And that's what we're going to talk about today, because I really do think more marketers, more brands need to invest more and guess less. When I say that, I want to start by reiterating and sharing something with a lot of you that you may have come across in your path, in your career, in hiring marketers or working with marketers. But there is way too many marketers who today view their craft as being more like an artist and are celebrated in many ways for coming up with very confusing, abstract, unique ideas that have zero business impact. We get flown out to Cannes to celebrate and have bottles of champagne popped on the back of this idea of unlocking creativity without thinking about whether or not that creativity actually impacted the bottom line. And I think that this shift in the way that marketers see the world is actually at a very crucial and important time. We are starting as marketers to finally realize that the reason why CMOs are being let go from their roles, the reason why marketers have a shorter tenure in the C-suite than any other profession, is because for too long, marketers have positioned themselves as artists rather than investors. And we need to be thinking about it that way. We need to recognize that marketing is an important and crucial part of the business landscape, and it can have a massive impact on your bottom line. It's not just fluff. It's not just lollipops. It's not just sugar plums and candies. It is, without question, something that can have a massive impact on the bottom line. And every asset that you create, every hire that you make as it relates to your marketing function as an organization should not be viewed as just an expense. It should be viewed as an investment. Every landing page, every paid project, every blog post, every experiment, every single tweet, every webinar, every session that you create, or every asset that you create, and I say the word asset intentionally, should be viewed as an investment. Because what we really want our charts to do is not take a path like GM, but to instead thrive and go up and to the right. Right? Whether it's a stock, whether it's traffic, we all want returns. The top chart represents the cloud companies, the cloud stocks over the last few years that have been traded across the NASDAQ, S&P 500, and Dow Jones in comparison to cloud companies and SaaS companies. This is a chart that is from Bessemer Ventures, and they talk about often like the cloud as being a key part of growth in the economy at large. And this is the type of trajectory that all of you should be looking for in your business and with your own growth. The bottom chart reflects the traffic as it relates to one of our clients at Foundation, who we've been working with for just 2 years and pushing and striving to constantly see their traffic move up and to the right. We strive for all clients to move up and to the right. And you should be thinking about the exact same thing. And in 2020, when we were all hit with the pandemic, the stock market was tested, but so was every marketing engine, every brand, every organization, right? Many of those organizations amidst the pandemic, when it first hit, decided that they were going to slash their marketing budgets. They weren't going to create more content. They were going to peel back all of their paid media efforts. They were going to put on hold their content creation and publishing. #mistake. Because even amidst a recession, if you go back into time to 2008, one thing stays consistent with humans all the time. And that is our thirst for information, our thirst for content, and our thirst for stories. So even during the Great Recession in 2008, even amidst the pandemic in 2020, people went to Google looking for information. And the brands that stopped producing information, the brands that put a pause on their advertising efforts, they missed out on one of the greatest opportunities to capture attention at a point in which the competition was at an all-time low, because everyone was pulling back, right? I want you to realize that every asset you create is an asset. It's an investment. It is something that you believe can result in future returns, a blog post, a case study, a social media post, a digital PR strategy, any single thing that you press publish on should drive ROI for your business, right? Assets are economic resources owned and controlled by a company. It's owned and controlled by an entity of business. So when you press publish on a piece of content and you pay a writer or your team creates it, you now own an asset. And that asset can drive results for you, whether it's traffic, whether it's shares, whether it's leads, whether it's direct sales. Those assets should be used, right? In this presentation, what I want to talk to you about is how you can think about the investments that you make within your organization. I want to talk to you about how you can strategically think about whether you should pull certain levers. I want to share with you some frameworks that I've leveraged with our clients, but also with our own brands to drive ROI, and how some of the world-leading companies are using these strategies and techniques to unlock amazing returns on their content investments. I want to show you why and how investing in content can help you earn millions in revenue, earn millions in visitors, and ultimately fundamentally change the way that you view business and marketing at large. This talk is not meant to be filled with theory and hypotheticals. We're going to get into the weeds, we're going to get into the tactics, and I'm hopeful that you will be able to leave here knowing something that you can apply to your own business, that you can actually start executing on. If it isn't in December, it's in January, it's in February, but in the months to come, you will be able to unlock success. So let me give you an example. Wise.com, the brand formerly known as TransferWise, gets 7.8 million visits per month, valued at over $11 million. Let's deconstruct that a bit because I'm saying some big numbers and you might be wondering, what does that even mean? So every month, 7.8 million people visit Wise.com. To get that much traffic with the keywords that people are going to Google to type in to land on their site, you would have to spend $11 million in PPC, pay-per-click advertising to capture that volume and get them on your website. But because Wise has been producing content over and over and over again, the Google bot has become addicted to crawling and indexing their site. This quote at the bottom is directly from the director of marketing at Wise. And why I'm showing you this is because there's a direct correlation between this organization's success as it relates to capturing value from the market and their ability to publish content. I want to show you this because I believe that if you are familiar with the concept of moats, competitive moats, which is essentially a competitive advantage, it was a concept phrased by more familiarized with the public through Warren Buffett and his work at Berkshire Hathaways. But the concept is essentially that every organization should be striving to create a competitive moat and advantage that is sustainable amidst all of the chaos, even amidst a black swan, like they're able to ride the wave. And I believe content can be a moat. I believe it is very difficult now for someone to compete with TransferWise because they have indexed so many pages. 3 million pages are indexed in Google, capturing millions of visits every single month. It's hard to compete with, but they're not alone. A lot of companies have taken this approach where they have created tons of pieces of content. And as a result, they are generating on an annual basis millions of dollars worth of traffic, right? Whether it's organic keywords, whether it's the amount of backlinks that they've established, they are able to capture a ton of traffic on the back of content. And it makes it more difficult for organizations today to compete with the HubSpots, compete with the Adobes, compete with Stripe, compete with Workday, because they have invested so much in creating content that answers the questions that their audience is going to Google looking for. And because they're now ranking for all of these phrases, for all of these landing pages, they're not only able to capture this audience, but they're able to take that audience and turn it into real dollars. This is why we should view content as an investment, right? It's time for anyone here who is a marketer to shake the industry imposter syndrome that is reaping through this space and realize, folks, our world is not just clicks and impressions. Our world is not just likes and backlinks. Our world is influencing real dollars for the companies that we work with and the companies that we serve. We can help organizations increase their valuation. We can help companies extend and sustain their market cap, we can influence real business things. And that is something that we need to acknowledge and realize that with that comes a lot of responsibility. And with that responsibility comes the realization that not all assets are created equally. Some assets will go to the moon. Some assets are going to fall flat. An investment, though, in crypto is very different than an investment in real estate. And an investment in a landing page is very different than an investment in a tweet. Now, I'm not saying that one investment is right and one investment is wrong, but you have to recognize that every single asset is created is going to have its own risk profile. It's going to have its own element of return. It's going to influence its own thing, and it's going to have the ability to impact your business in a different way. So how do you manage that? You manage it the same way that you would manage your own personal investments, right? You think about it as every single asset that you invest in, the same way you would think about the investments that you make as a human and as a personal investment vehicle, right? When you're thinking about your personal investments, you have to realize that the way that Corey makes investments is going to be very different from the way that Ross makes investments, because Ross and Corey are at different stages in their lives. Corey may have kids. I may have kids. I may have no kids. I may be trying to retire in 20 years. Corey may be trying to retire in 1. Things are going to be different. Businesses work the same way. Some businesses are in a state of high growth. Some businesses are trying to just get on the map. They're trying to break through a noise. Some businesses are going to be looking for an entire different outcome. So when you think about your content, you need to be thinking about it like an investment portfolio. And at Foundation, this is a concept that we apply to every single client we work with, where we figure out what their investment portfolio should look like and then make a recommendation around, should you be investing in growth SEO? Should you be investing in social content, thought leadership content, culture content, sales enablement content? What type of content should you be investing in? And when you are thinking about that for your business and for your opportunities, that changes the way your entire organization operates. And if you are someone who feels like we are just trying to get started, this framework, this mental model, and this approach can actually be very useful for speaking to the CEO, speaking to the executive team around why they should be investing in marketing. Because when they hear it in this sense and in this lane, it makes it a lot more clear for them to understand. And when you can tailor it to their industry, let's say you work with a more conservative organization, an investment portfolio might look more like this, where 50% of everything that you do is going to be validated SEO work, where it's keyword research that has already been done. You know people are looking for it. You know what the phrases are. You know how to optimize it. You know how to create the landing pages that are going to rank for it. You are going to invest 50% of your budget into validated SEO. But you also know that you have a strong sales team and a strong sales engine. And those people are itching, bagging for case studies. They're bagging to get a one-pager. They're bagging for materials that they can use to accelerate the time from contact to close with their prospects. So 20% of your investment might be in sales enablement content, but you also need to think a little bit long-term. So you might be investing 10% into backlink content, right? You have to realize that every organization is different and their investments in content should be different, the same way that a human's investment is going to be different depending on a whole bunch of different factors. My grandmother's not going to invest in crypto. It's not happening. But someone who's fresh out of school might find that to be a fascinating, life-changing investment. So those are the things that you need to be thinking about. Similarly, if your organization is looking for exponential growth, you need to be thinking about investments that can help you have the chance to go to the moon. So maybe 30% of your investment is going to be in high growth SEO, 20% into thought leadership, and 20% into backlinks. And because you're trying to go to the moon, 0% of your investment is going to go into something like culture content, where you're talking about your team, you're talking about the new person sitting on your board. All you're talking about is content that can help put you on the map, right? Again, this all comes down to understanding that every asset is created differently. And when you think about the different assets, you have to realize that they each will come with their own potential return, and they all have their own level of risk. A meme is very different from a white paper. And a white paper is very different from a case study, and a case study is very different from a podcast. Every single asset is going to have different levels of potential return, and every single asset is going to have a different level of expected risk that comes with it, right? You have to be okay with that. Let's dive into some of these asset classes and just discuss a little bit around what they look like and how they feel. So one of my favorite asset classes is the world of memes. I love memes. I think they're hilarious. I think that they are one of the most fascinating phenomenons of this generation. They are without question risky, but they also have potentially high returns. When you look at organizations like Telegram, they are putting out memes that showcase their perspective on the idea that in the trash can, essentially, you eventually got to a point where WhatsApp and Facebook are trash. But then you risk the opportunity to open yourself up to backlash from another company like WhatsApp, who sends you another meme and they're saying, hey, we're not actually end-to-end encrypted. So they're starting to throw shade back and forth, and that can feel uncomfortable. Or you leverage this Bernie meme where you put Bernie on a chair next to your products. People start to engage with it. It had 424 comments, 961 shares. This is what they call reactive storytelling, but it's essentially the idea of taking things that are popular in the market today, applying a brand spin to them, and then publishing it on your socials. The average price to create a meme, very, very low. It does not take a lot of budget to come up with these ideas and to ship it. The reach, though, can be mid to high. You can reach only the people who follow you, or it can go viral and you can reach hundreds of millions of people, right? The average life cycle, though, is short. The meme typically hits and then it's done in 48 hours. The potential brand risk is high because you can open yourself up to trolls. People can call you out for being lame if it isn't going to actually be funny, if it's not actually hilarious, if your team thinks they're funny but they're not funny. The internet will tell you and it will feel bad, but those are things that you have to also be comfortable with. The standard allocation that we see across most organizations, specifically in B2B SaaS, is between 0 to 15%. It is not a highly adopted channel, but the rate of return is low to high. You can either hit or you can miss. But with that comes the realization that the average cost is low. Thus, you have to determine for yourself if this is something worth investing in. Another asset class is interactive tools. I love interactive tools. They are a great way to capture leads. They are a great way to get backlinks, but their price is not as cheap as a meme. To develop an HVAC load calculator, you are going to have to invest money into engineering, into design, into writing, into email automation, into a lot of processes that you wouldn't have to if you invested in a meme where you just took a picture of someone and put it on something and added some text to it. It's a whole different ballgame. But companies have built a content moat on the back of interactive tools. Shopify is a great example of that. They have tools that are free. So they are arbitraging the market by releasing tools that people used to have to pay for completely for free. So before you would pay someone to create a pay stub for you. Now you can go to Shopify site and you can actually create a free pay stub for free. Prior to Google launching their own QR code maker, some sites actually had a business model where you would pay $1 and they would create a QR code for you. Shopify seen that as an arbitrage opportunity, so they've released it for free, right? Jobber Academy, they've made it free for you to essentially make a flyer. If you are a lawn care provider, if you are a janitor, if you are offering a service, you can use their product and make a flyer for free. To make these, though, it is going to be mid to high of an expense. Your reach can be mid to high. The life cycle is long. You create this thing once and you can distribute it forever. The repurpose value is limited. You can't really repurpose this asset. It's here, it's there, and it's done. The brand risk is relatively low because you're creating a free tool for someone to use. The standard allocation in B2B SaaS is 0 to 10% because of the cost. It is a barrier, but you know what they say, do things that are very difficult to replicate and copy, and it makes you able to compete long-term. And then the rate of return is mid to high, right? So those are two very different types of content asset classes, memes and interactive tools, but they both have a role to play when you're thinking about your investment strategy from a content lens, right? At Foundation, we love using data to inform the investments that we make in content. So our audience is typically in the marketing space. So what did we do? We went to some of the top marketing blogs in the world. We dug out a spreadsheet and we started to do some research. We wanted to see what type of content could we invest in if we wanted to generate backlinks. So we took all the top blogs, we scraped and pulled all of the data surrounding the amount of backlinks that these different assets were generating, and we started to sort it by top posts, which ones had the most backlinks. And then we started to identify the types of content that were generating these backlinks. Was it a tool? Was it a guide? Was it a collection of research? Was it a thought leadership piece? Was it a how-to report? Was it a definition of a keyword? What was it that was generating backlinks? And what we found were that tools, interactive tools, got the most links across all content marketing assets in MarTech. That was interesting. But what got even more interesting is that definitions were number 2. Definitions weren't generating nearly as many links as tools, but definitions are also a whole lot more cost efficient to create. We also found that people were investing in a lot of different things that essentially were not going to provide the same level of ROI, right? So we had to essentially realize that people want tools, people want definitions, people want templates. This is something that means you can use this type of methodology of research to figure out what you should be creating as well, right? You have to consider this when it comes down to things like privacy policy generators or business plan templates, all of these different types of tools that people want, there is a significant amount of demand. But people are also just looking for good old-fashioned definitions as well. People are looking for definitions on phrases. For example, people are looking for stats posts, right? They're looking for statistics. So we created a post on Foundation where we just took some of the best statistics, some of the statistics surrounding LinkedIn, Reddit, Instagram, etc. We pressed publish on these pieces based off of that research around MarTech and what was resonating. And we quickly found that LinkedIn piece took off. We were able to get 600 and some links. In fact, for one day, we actually ranked number 1 in Google for the word LinkedIn. It was a horrible day for our bounce rates because everybody was coming to our site thinking that they were going to get to LinkedIn, but they were just getting a stats post based off of LinkedIn, right? It was an issue with Google. But if you can root everything that you make in terms of investments, if you can root your investments research, in data, and you invest more time in actually studying what's going on, instead of guessing what you should be doing, you can go farther with your marketing efforts and your marketing budget. Invest more, guess less. Another example is Shopify. We talked a little bit about tools already. And what they've done very successfully is they've created a lot of these different tools. I want you to look at the amount of traffic that Shopify is generating from free tools that they've published, whether it's a CPM calculator, a refund policy, a gift card certificate. They are generating 2 million annual visits to these pages, these tools, on a yearly basis. And that number is going up and to the right consistently. One of their best investments that they ever made was acquiring a company called Oberlo for 15 million back in 2017. At the time, that site was generating less than 500,000 visits. You fast forward to today, and they are generating over 2 million visits just to Oberlo.com, a tool that helps people figure out what products are selling on Alibaba for low prices so they can then integrate it into Shopify and then resell it through AliExpress on their own sites. This is arbitrage in many ways, and you have the opportunity to make investments just like this. It doesn't need to be 15 million. It can be acquiring a small site. It can be acquiring a expired domain. It can be reaching out to an influencer and buying a product that they've created for a low price. All of those things are an opportunity. Invest more, guess less. Another area in which you can focus is those high growth SEO opportunities. And a lot of people ask when I talk about high growth SEO, what am I talking about? Like, what does that even mean? What I'm talking about when I describe high growth SEO opportunities, it's opportunities where the volume in the search today might be relatively low, but the volume of that search traffic 10 months, 12 months, 2 years from now is going to potentially be very high. For example, if at the beginning of the pandemic, you were creating content about backyard offices, you were probably able to generate a lot of traffic and a lot of revenue on the back of affiliates and things like that. Because during the lockdowns, everyone was thinking about how can I create an office in my backyard if they live somewhere where the weather was actually very nice. They were making those decisions. They were looking up this information. They were looking for sourdough. So if you happen to have a blog about sourdough bread, you were generating a lot of traffic at that time. If today you fast forward and you look at some of the trends, some of the things that are top of mind, conversations around things like the metaverse, conversations around cryptos and NFTs, if you rewind back 5-6 years ago and you were someone who bought the domain nft.com and started to create content on that topic, today you would be laughing, right? That's what high growth SEO is. It's trying to create content on things before they're ready. So this backyard office space showed up in this site called Exploding Topics as something that more and more people were looking for. So what do? You do some keyword research to see what are people looking for today as it relates to just general home office. Because if you can see what people are looking for as it relates to home office ideas, maybe you can take modifiers of those phrases, apply it to your space as it relates to a backyard office, and start creating content around it. So if I see that today there's 19,000 people every month looking for home office ideas, maybe I should be writing a blog post called 10 backyard home office ideas that you should know, things of that nature. You're going to start creating content based on research that you are using and gathering from search data. If you want to get ahead of the trends, the best way to do so is to try to stay on top of them as it relates to your industry. Google released this report every single year about the most frequently searched for keywords, right? If you were creating content about sourdough, if you were creating content about virtual learning, virtual field trips for years, if not months in advance of the pandemic, you would have been able to ride the wave of capturing a lot of traffic. Invest more and guess less. One of the best acquisitions in, I believe, business marketing history that has yet to be well documented and well understood is HubSpot's recent acquisition of The Hustle. The reason why this is an important moment is what you're looking at here in this chart is HubSpot's organic traffic as a site. At the beginning of 2020, they started to see a dip. Google stopped ranking HubSpot's content as well as it used to. They didn't make that 10 million mark, but they were trying and they were almost there. Then they decided that they were going to buy The Hustle. They bought The Hustle because The Hustle ultimately had unlocked something that they were unable to do. HubSpot as a brand is now no longer just an inbound marketing tool. They're offering a handful of services that provides elevation for your sales team, through to your customer success team, all the way through to your CFO and finance team. With that comes the requirement of reaching more CEOs. Their layup is to reach CEOs who happen to work at tech companies. So what did they start doing? They started to acquire a company like The Hustle, who happens to have unlocked the insight that if they publish content that resonates with folks who are subscribed to Y Combinator's news, Hacker News, they are able to capture a ton of traffic. The Hustle unlocked content market fit with the engineering and CEO audience of startups in this space. So HubSpot acquires them. 48% of all of the referral traffic to The Hustle was coming from news.ycombinator.com. That's a lot of referral traffic. And it means that they can consistently press publish on pieces of content that audience is going to resonate with and be interested in. That means that they will be able to get to that 10 million by acquiring The Hustle with ease. Right? They understand what type of content generates social shares. They know that by acquiring The Hustle, they're able to now have a team that has published pieces that are getting 32,000 shares on Facebook, 200 shares on Twitter. They know how to create that type of content. And throughout that content, if it's now branded as HubSpot, if it's talking about HubSpot, that is a great way for them to acquire new prospects, right? You might think, Ross, I can't afford to acquire The Hustle. I know, that's okay. Some of you might. But here's the thing. You can use a site like flippa.com to find websites like Loans Geeks, like Beer Maps, Uplifting Today, and some of their prices might be more realistic for you. You can acquire these sites that have created content engines that are specifically speaking to the people you're trying to connect with. If you are trying to connect with engineers, maybe you go on one of these sites like Flippa and you look for a site that's speaking to engineers in your space. If you're trying to open up a new domain and speak to a certain audience, maybe you acquire a content site or a newsletter that speaks to the interests of a specific space, right? Every single piece of content that you create is an investment. So why not start making investments in channels and opportunities and media publications that have already published a ton of content and use that to drive results for yourself? There's another great site called MicroAcquire. They have a newsletter and they're awesome in terms of their ability to offer you SaaS opportunities around companies that you can acquire. We've talked about tools as being a great way to generate traction and generate backlinks. If you can go to MicroAcquire and find a product that is already generating revenue, you can connect that to your own existing site, offer it for free, or continue to allow it to generate money, but ultimately use it as a way to generate backlinks for your company, right? You can look for these opportunities right now and unlock some amazing returns for your business. There's also Slack channels that you can join where people are every single day announcing and sharing that they are selling different sites. They have people who are looking to sell and acquire finance blogs. They have people who are trying to sell marketing blogs. You have the opportunity to go in and look at what these sites have actually published in the past and try to invest in the ones that are aligned with your business. And they are not by any means small time blogs. When you look at this one at the top, it has 89 domains. It has links from some of the top publications and media. These are opportunities that you should be thinking about for your business if they present themselves. Invest more, guess less. Another brand that has done a great job at building an SEO moat is Airbnb. And this is an investment in what we call dynamic landing pages, where they are essentially creating templated landing pages over and over and over again with one simple modification, and that is the name of the location. So all of these URLs look the exact same as this visual that you see on the right, except the word vacation rentals in Denver becomes vacation rentals in Miami, Chicago, Orlando, Nashville, Hawaii, Palm Springs, Paris, etc. And then the top rated vacation rentals in Denver changes as well. And then they're importing imagery across the board from these different regions, and they're using their API that is connected directly to locations to pull in the most frequently visited spot in terms of the top rental in this landing page as well. And they're using this consistently. And what it does is it generates a whole bunch of traffic because they set up the dynamic, the specifics, the variables at the front end of the template. Then they copy and paste that experience across the site with different locations, and they're able to generate millions of visits on the back of it. Now, if you are ever interested in learning more about investing, one of my favorite concepts that I've been studying lately is this concept of a 100-bagger. And a 100-bagger is essentially an investment that you make into a smaller stock that ultimately grows to 100x. Now, what you can think of is these are massive outliers. They are difficult to find, but they are things that can fundamentally change your life and your investment approach. It is very difficult to find a 100-bagger. But when you produce and you create a bunch of landing pages, it becomes easier to find them, where 12 of those landing pages make up more than 50% of all of the traffic for Airbnb. 50% of all of the traffic to these pages are coming directly from only 12 of those landing pages, specifically San Diego, Chicago, Miami, Myrtle Beach, etc. These pages are generating the vast majority of their traffic. Now, some companies will only invest in a couple of them down here, and they'll never see this outsized return because they didn't diversify their investment into enough landing pages. The return here is tremendous. And you have the opportunity to do it as well if you invest in scale, if you invest in creating content assets that actually aren't just limited to one or two pieces. And then you say, oh, I didn't see the ROI, I'm going to call it a day. But instead, you keep on investing, right? You keep creating more pages, more content, more stories. Eventually, you're going to find one that goes to the moon, right? The same way that in between 1962 and 2014, there's only been 365 100 baggers, a stock that actually 100x, you have to recognize that it's going to take a lot of investments and a lot of failures before you can find those 100 baggers for your own company as well. It takes an investment, but you can apply the same methodologies that Airbnb has done to potentially your own business. If I run a marketing software for email, I could very quickly say, I'm going to take this concept where they have vacation rentals in place, top rated rentals in this place, value, value, value. And then they have a call to action that says, enjoy the best of this place. You could do that for email marketing too. Email marketing for hotels, nonprofits, doctors, small businesses, realtors. You can create so many different landing pages targeting specific niches that you can ultimately scale this across multiple yada, yada, yadas, multiple industries, and then have sub pages that still speak to those niches and ultimately uncover through production your 100 bagger as well. Invest more, guess less. Another thing that I want to talk about is the importance of holding and continuing to optimize your investments. A strategy that I believe is the most important in a lot of investing is just being patient and holding on even amidst the chaos. Hold on for dear life, right? That is something that I think a lot of people need to think about as it relates to content as well. In 2016, Salesforce wrote and published their first piece called What is a CRM? And in 2017, 2018, 2019, 2020, and 2021, they continued to hold the #1 spot in Google for this phrase because they have continued to update and improve that piece from year to year to year. The piece that you published in 2016, the piece that you published in 2019, the piece that you published in 2018 should be considered an asset. And you don't just let an asset be forgotten about. You continue to improve it. You continue to optimize it. You update it with new information. You update it with new context, with new stories, with new call to actions, with new visuals, with new designs. You try to improve it so you can too see the rise of traffic to this asset. The amount of people looking every single month for answers such as what is a CRM has continued to rise month over month, year over year, because more people are coming online. And I am convinced that when we fast forward to 2035, a lot of brands, a lot of marketers are going to be looking back and thinking to themselves, wow, I really wish I created content before that second half of the globe got online, because that is still how many more people need to come online, an entire half of our population. So when you think about it that way, you have to realize we're still in the early days of content. We're still in the early days of production. We're still in the early days of search, and we're still in the early days of creating content that can shape culture. This is the opportunity if you hold and continue to optimize your content. We at Foundation have pieces of content that were published back in 2017 that still to this day are generating hundreds of thousands of dollars worth of new business for the company, right? I had a YouTube video that I published back in 2018, just 2 weeks ago, result in someone sending me an email from a SaaS company asking, hey, can we learn a little bit more about Foundation? We would like to work with you. And they closed within 2 weeks because of a video that was published in 2018, but we've continued to optimize that asset, right? Hold and continue to optimize. There's going to be across the board, no question, going to be some ups and downs along the way. But the same thing is happening in the market as it relates to stocks, as it relates to investments. There's going to be depressions, there's going to be recessions, there's going to be black swan events, there's going to be things that seem out of this world that make you feel like I need to just call it quits. But the longer you stay in the game, whether it's in investing, whether it's in marketing, whether it's in content, whether it's in business, the better likelihood you are to see returns, as long as you're making the time to invest in actually knowing what you're investing in. As you think about your content, I strongly encourage you to remember that everything is a risk, right? Creating thought leadership content is a risk. Creating sales enablement content is a risk, but not creating content at all is also a risk. In fact, I would say it's the biggest risk of all. Are you willing to risk investing, or would you prefer settling for what you already have? Do you want to hope that people find you, or do you want to do things and invest in things that are going to increase the likelihood of people finding you? Invest more and guess less. We've talked about a lot of different things today, and you might be thinking, where do I start? What should I do? How in the world am I going to start creating memes, making investments in dynamic landing pages, thinking about these sites like Flippa, Microacquire? Ross, what in the world are you doing to me? It is too much information. I hear you, I get you, I feel you. So I'm going to challenge you with something much more simplistic, much more straightforward. I challenge you for 3 months to invest in creating in-depth resources that solve problems for your people, for the people you're trying to reach. I challenge you to invest in best-in-class YouTube videos for 3 months. I challenge you to just stay focused on creating Twitter threads for 3 months that your audience is going to love if your audience is there. I challenge you to invest in high-intent landing pages for just 3 months. Invest in going on podcast tour, reaching out to a bunch of podcasts that your audience are listening to, and scheduling time to connect with them. I challenge you to do personalized outreach for 3 months. I'm not challenging you to do all of these things at once. I'm challenging you to pick one and to run with it and see how it impacts you. Because what I believe a lot of organizations make the mistake of, and it's a quote from my dad, and I think it's applicable in this case, especially in marketing, which is it's better to have one good kid than 3 bad. And the same thing applies to the investments that you make. It is better to be really, really good at one of these tactics, one of these strategies, and one of these angles than to be mediocre at all of them. So for 3 months, I challenge you to go deep, to invest in learning how to create a great in-depth resource for your audience, how to create great YouTube videos, how to create great Twitter threads, how to understand intent of search and develop landing pages around it. For 3 months, I challenge you to go heavy into one of these places. Because if you do that, something tells me that your investment, your ROI of this is going to be better than my returns on GM. But don't worry, I ended up getting into Tesla and I did okay. I appreciate all of you. I hope that you have found some value in this presentation. If you have any questions, I'd be happy to stick around for the next 10 minutes and answer any questions that you may have.
Awesome. Thanks a lot for that, Ross. That was really good. Folks, like you said, there's a Q&A feature. Feel free to pile some questions in there and we'll be happy to answer them. But maybe I'll start, Ross. I'm curious, like as a marketer at maybe an early stage startup or a startup of any type, how do you suggest they think about maybe that first investment into one of those asset classes? Like I'm sure there's maybe one that resonates with their audience the best, but maybe there's 2 or 3 where they're thinking, well, geez, where do I start?
Yeah, great question. So I always say that you should kind of go down the path of most returns with least resistance. So you want to think about a few things. One, what is inside of your circle of competency? You might find that it's very attractive to go after YouTube videos, but you might actually find out that you don't do well on camera. Thus, that's not going to be the path that you take. You might find that your skill set is with the written word. You're a great writer. You're somebody who's great at writing blog posts, and that's going to resonate with your audience. So that's where I believe you should go. You want to figure out where your skill set is as a team, as an organization, and then spend time on the channel where, yes, it would resonate with your audience. It would work with your audience. It would drive results, but it's also inside of your circle of competency. And when you find that circle of genius, double down on it, invest in it, and then go on to the next one after you have demonstrated that this channel can work, or if you've identified that it can't work, move on to the next one relatively quickly. Give yourself that 3 months to tinker and experiment.
No, that makes a lot of sense. Kind of like you said, if it's one thing if a channel is really great, but if you're no good at it, then it's a completely different story. So exactly. I'm kind of curious as well, so once you kind of land on that particular channel, maybe I'm really good at blog posts, I want to lean into that. How do you know if it's working the way you want it to, especially if the ROI can maybe take some time? Of to your challenge, so 3 months in, is that enough time to figure out, okay, this is working, or maybe I'm getting a little bit of traction, or maybe should I move to something else?
Yeah, I think it's a bit of a curiosity play. You always do want to be doing a bit of benchmarking against things that are happening in your market amongst your target audience to see how are you comparing in terms of the results? Are you generating an increase in traffic? Yes or no? If the answer is no, then you're probably doing something incorrect. If you can already demonstrate that somebody has found content market fit in your space and they're actually driving a significant amount of results, there might be a problem with the way that your site is set up. I've seen so many companies just invest tons and tons of money into blog posts with the intent of ranking in Google, but they don't have their robots.txt file set up correctly. They have their whole site not built in a way that is scalable and indexable, and those can be massive problems. So I think in many cases, the problem is that often you don't take that time to step back and like assess, how are competitors doing? How are we doing? What's the difference? Are they at a different point as us? It does take some time and importance of reflection, but I would say 3 months of consistent production and investment in a channel should show you whether or not that channel should or could work for you. If it's not working after 3 months, it's very possible that you're going down the wrong path.
No, that's really good. Again, another similarity to investing. You kind of mentioned benchmarking there. Very the same as if you're managing an investment portfolio.
Exactly.
So we do have a question here.
Cool.
So thinking about keeping track of ROI, you brought up that interactive tools would require back-end events like email automation in the creation cost. Wouldn't you have to include that cost in all content assets that could/would lead to email automation?
You would, but for some of them, it's going to be a little bit more simple. So if I have a white paper, the cost to create a 2-email drip campaign that's going to follow is going to be very different from an interactive tool that may need to actually take the input from that tool, format it in a way that goes into a PDF that is personalized, and then send it off to the user. The interactivity of that tool is going to be probably much more complex than someone who is just looking to download a white paper. The tailorization, so to speak, is going to be much more sophisticated with some tools. We've worked with clients who have developed tools that have more than 500 different variables in terms of what you can receive at the end of filling out a quiz or filling in your information. So every input that you give results in a different variable in terms of the deliverable, and thus it's more complex on the back end as it relates to what you get back at the end of your experience for the tool.
Okay, no, that makes a lot of sense. Another question we have here is, what is the point of traffic growth if you don't have quality conversions?
Great question. So 2 points there. 2% conversion rate, 1% conversion rate of 100 people is always going to be very different from a 1% conversion rate of 1 million people. So if it's always a percentage and that is your conversion rate, then the traffic actually has a major impact on it, right? Like 1% of 100 versus 1% of 1 million is a whole different ballgame. And both have their pros and cons, but they're both a low conversion by some standards, but they both mean completely different things. If you can convert 1% of 1 million people, that's a very interesting situation. If you can convert 1% of 10 people, it's another very interesting situation / you're going out of business, right? So there's the traffic growth piece can have a massive role. That said, you also need to be thinking about conversions and how to optimize it and improve it consistently. There's no question that your conversion rate should be something that you're thinking about and trying to improve. You should also be thinking about how you can increase the amount of top of funnel in terms of the traffic getting to that page, but you should be thinking about how can we optimize the conversion for this product, for this solution. Marketing will never save a bad product. If your product cannot retain users, if your product cannot deliver value to the user, marketing won't fix it. Don't invest in marketing at this point. Like, yes, you want to get a little bit of traction so you can test it with the people and see, do we have product market fit yet? That is a very important thing to test. But if you are consistently seeing low quality conversions for your product and your value prop is tight, your message is tight, you believe that your roadmap is tight and the actual features that you have built are positioned the right way, and you're still seeing low conversions, it's possible that your product isn't actually fulfilling a need that your audience has. And that's a bigger problem. And it's a problem that you should be spending all of your attention trying to solve.
No, that's really good. Like I said, marketing can't save a bad product. That's a really good thing to kind of take away, I guess. So another question we have here is, so I've read that in multiple articles that it takes about 1 year or longer to see results from SEO. In your experience, is that accurate? Is that too long? Is it not long enough?
It's It depends on, and I know that's like the MBA answer, and everybody always says, MBAs always say it depends, because there is no black and white to a lot of this stuff. It's very much shades of gray. You can see a result from an SEO effort in 24 hours if the result is directly related to a technical problem on your website. You can see a result in 1 minute if the problem is related to something technical on your website that is not optimized for search, right? Similarly, if you are in a low competitive space where there's not a lot of people who already get SEO competing with you, you can very quickly rank number one and start seeing ROI. A year to see ROI from SEO is typically in a highly competitive market. If you are competing against the Salesforces, against the Close.coms, against the HubSpots, and you are an up and coming startup trying to rank for the word CRM, good luck. May this force be with you. It is going to be a very difficult thing. Can you do it? It's not happening in a year. I'll say it now. Like, you're taking 5 to do that. And it's not going to just come from SEO. It's going to come from brand excellence. It's going to come from product excellence. It's going to come from PR excellence. It's going to come from social media excellence. It's going to come from a whole bunch of variables for you to displace a market leader who has spent years to establish themselves as a leader. If you're in a net new industry, if you're really in that world of like, let's be the first in this lane, and you're creating a category, all that stuff, you can do that in a month. But if you're going after a giant, it's going to take years.
No, that's great. Thanks for that. We have another question that just popped in.
Cool.
Oh, yes, so the question was, is there going to be a recording available afterwards? And yes, there is. It's going to be sent to the email you signed up to the webinar with. So we'll have that out later today, hopefully.
Awesome. And if folks do have any of the other questions, by all means, I'm very easy to find online. I'm on Twitter. That's my go-to platform. I'm also on Facebook. And if you're into this stuff, I would strongly encourage you to check out the Foundation newsletter. Every Tuesday and Thursday, we send out content about B2B marketing, about SaaS marketing, and how you can grow your content marketing engine. Concrete, Corey, thank you folks for having me. I hope folks got a lot of value out of this. And if folks have any other questions, by all means, feel free to reach out. I'm very easy to find online.
Yeah, absolutely. Thanks, Ross, for coming by. And folks, if you're not following Ross on Twitter, that's your first mistake, in my opinion. But no, thanks again, Ross, for the time, and really appreciate it.
Thanks so much. Appreciate it. Take care, folks.
Cheers.